In today's session, we are seeing the markets breathing a sign of relief after yesterday's turmoil, both in and out of the market. And now, I think moving forward, it is going to be much easier path for Mr. Biden as well as for the USD. Now the focus is shifting to the reflation, and as Democrats are going to have the control both in House as well as in the Senate, we are likely to see Mr. Biden pursuing the expansionary fiscal policy, and that is going to give some reason for the market participants to take the bets on the USD, and we are seeing also the US Treasury is climbing above 1 percentage point after a while now, and that is going to help the USD in the short to medium term as well. So the focus is here shifting to the USD gaining some strength, and it is likely to be sustained in next couple of sessions at the least. If we look at the data docket for the day, we had plenty of data releases coming in for the euro area, and here almost all the data points are pointing to the softer economic conditions in the euro area. If we look at the inflation rate, both core as well as total inflation rate for the month of December, it is in the deflationary zone. The year-on-year figure is at minus 0.3%, and also the core inflation is at just 0.2%, not far away from the deflationary zone. And at the same time, the retail sales were also released for the month of November, and here also the decline is there, and not much can be said about the services sentiment and the industrial sentiments, both of which are continuing to decline. And this is happening because the COVID pandemic is showing no sign of retracing in the European continent, and that is taking a heavy toll on the economic activity there. Moving on to the North American trading session, we got we are yet to get the initial jobless claims, which are going to be released shortly. And after last week's reading below the 800k mark, 800,000 mark, for this week also, for the week ended 2nd January, the reading is likely to be just above 750,000, and this will be a good sign that at least some economic uptake is there in the US economy. On the non-manufacturing front, we are scheduled to get the ISM non-manufacturing PMI data, and here the expansion is likely to be sustained for last month also, and the reading, which is likely to be slightly lower than the prior reading, but still it is going to show the robust expansion happening in the services front. Just a couple of days back, we had got the manufacturing PMI data for the US, and that was also showing robust expansion, and same thing can be said about the non-manufacturing sector in the US. So for US at least, the data is showing signs of improvement. Now let's shift our attention to the technical aspects of dollar index, and we will also consider the GBP USD. Let's start with the dollar index technical outlook first. This is the daily time frame chart, and after a long slide towards the 0.88 mark, we are finally seeing some reprieve on the lower side, and here the dollar index is finding some buying momentum and trying to get closer to the 90 mark. And I think, pardon me, I said 0.88 in the initial. It is 88, not 0.88. And on the lower side, it has consolidated for last couple of sessions, and after yesterday's sharp move on the higher side, which was also erased into for some time. But again, in today's session, we are seeing a recovery gaining pace, and the move on the higher side is looking a lot more sustainable in today's session compared to the last trading session. So if we look at the technical parameters on the medium term, the 4 hourly chart, we have this flattening of the regression curve where we had the first support coming into play closer to the 89 mark, and now the dollar index has found support closer to this first support and is trying to show the climb on the higher side. It is going to be interesting to see if it will be able to breach past this near-term resistance, which is going to be there around 90. And if it is able to climb above this immediate resistance, then I think the next target will work out closer to the central pivot point, which is there around 90.5. And I am expecting the dollar index rally, the upward momentum to be sustained, and in next couple of sessions we can indeed expect the dollar index to climb back towards this 90.5 mark in this ongoing momentum. So if we want to take advantage of these changing circumstances, I think we will have to rely on these convergence of 50 and 100 SMA. We have these both the SMAs in play around 89.5 zone, and in last session also we saw these buying momentum which eventually dissipated, and again this decline on the lower side. But now in today's session we are seeing the sustaining of the break above these SMA, and I think now moving forward we are likely to see these SMAs acting as the near term support. So unless and until there is fresh breakout below these SMAs, I am expecting the dollar index newfound buying momentum to be sustained, and in due course of time we can expect the rally to get past these immediate hurdles. And as I was talking about the near term resistance, which is going to be of the central pivot point of this month's pivot point series, which is there around 90.5. So that should be the immediate target if we are going to go for the long positions anywhere closer to this 50 SMA zone. We will need at least one of the two things to happen. Either there should be some correction on the lower side, or if we see the dollar index sustaining the momentum, and if it goes in an consolidation phase, even in that scenario these SMAs will try to catch up, and then that will be more profitable for us also from the risk reward perspective if we are going for the fresh trades as close as possible to this convergence zone. And with the help of these SMAs we can try to cut down on the stop loss levels. I think from the immediate term perspective we can utilize these swing low established just below the SMA mark, and we have strong reasons to believe that unless and until there is fresh breakout below these swing lows, we can indeed be hopeful of the momentum being sustained. And as I said, for that we can even take the risk of around 30 to 40 pips, and on the higher side we will be in position to target almost 70 to 80 pips, and that should be good enough from the conservative requirement of the risk reward ratio of 1 is to 2 as well. Now moving on to the GBP USD. The USD is also strengthening across the board, and that is also expected to happen against the USD. So here we will try to figure out if there are any emerging trading opportunities to go short in the GBP USD currency pair. Looking at its daily time frame formation, the GBP has run off a great deal indeed, and it has been hovering closer to this 1.36 mark for last couple of sessions. GBP is usually pretty volatile, and for it, the 100 pips in a day is no big deal. We usually see it moving close to 100 pips on a day-to-day basis. Even in today's session, the volatility is fairly high, and for new trading opportunities I think we can indeed look for these 1.36 zone to see if there are optimum entry and exit points. I am expecting now after this rally the GBP USD to enter into a consolidation phase and some correction can't be ruled out from these highs. So looking at that, if we were to target for the short selling trade, then on the lower side, the targets can be kept closer to these central pivot point. If we look at its regression curve as well as the pivot point series, both of these are still pointing upward, and that should be expected given these continued rally which we have witnessed in the GBP USD. But if we look at its regression curve of late, the GBP USD has now entered into this lower band of the regression curve, and if it is not really able to climb back and go on the higher side, then I think in due course of time the regression curve is likely to flatten, and that will provide us one more reason to be little bearish in the GBP USD's technical outlook. On the pivot point series formation, we have this price action happening in between these first resistance and then the support in form of this central pivot point. But we can't really be too bearish, but still we can indeed expect the GBP USD to move on the lower side at least till the central pivot point, and then depending on the kind of price action which we will observe, once it gets there we can decide to keep the position open, or if required we can book the profit and get out of the trade. So here, looking for today's trading entry, I think we can utilize this 200 SMA, which is there around 1.360, and if we are fortunate enough to get the entry closer to the required zone, then I think we can keep our stop losses just little above these immediate swing highs, and for us, then the target is going to be closer to 1.350. As I said, we are going to target the central pivot point of this month's pivot point series, and that is going to give us the risk reward ratio of 1 is to 2. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write to me in the feedback section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. Thank you all for joining in. Do subscribe to the Educoscopy webinar channel. Goodbye.